Hey everyone, and welcome back. If you have come here looking to develop your understanding of the income or profit and loss statement, then you are certainly in the right place. Because in today's video, I'm going to be taking you from having little to no understanding of an income statement to having a strong foundational understanding of one of the most important financial statements. The video is broken down into 3 sections. The first, we will be discussing what is an income statement. In the second section, I will be breaking down some of the key financial terms that are tricky to understand that are within an income statement or a profit and loss statement. And then finally, we are going to relate it in the context of analyzing stocks, analyzing businesses as long-term investments. What do I look out for specifically when making an investment and looking at the financial statements? As always, if you enjoyed today's video and you got some value out of it, the best way that you can show me and continue to support this channel is by leaving a like on the video and also letting me know your thoughts down in the comment section below. So either of those 2 things helps me out a ton. But for now, let's jump over to my computer and go through a real example while I'm explaining some of these concepts around the income statement. All right, so now that we're in my computer, the first thing we're going to go through is a brief explanation of what an income statement is. And the website that I'm using to help me show this explanation is Investopedia. It's a fantastic resource for finding out information about basic financial terms, as well as more complex things as well, and analysis for looking at stock market investments. So highly encourage you check this website out if you haven't already, particularly if you're looking for specific numbers or a certain financial term that you don't understand. But their explanation is very good, so I'm just going to go ahead and read what their explanation is. And there's a couple of major points that I would highlight here. The first is, what is the purpose of the income statement? What is it showing us? And what it's showing us is a company's financial performance over a specific accounting period. So the examples that we're going to take a look at today for the Coca-Cola company and then also Facebook, these are over an annual period, right? You can see here at the top, it says year ended December 31st. So we're getting a year's worth of financial performance. However, these also come in quarterly and half yearly for US and Australian businesses when they're reporting. So it's important to understand what period we're looking over, of course. That's something we need to know. The second thing to mention here is that there's a number of different names that the income statement has. So income statement being one of them. Another is profit and loss statement. And then if you're in the official financial statements, it will be most commonly known as the consolidated statement of income. So again, something to note. But basically, hopefully after this video, after I've gone through and explained some of these major lines, regardless of what the title is, you should be able to identify whether it's an income statement or some other kind of financial statement. So the income statement is showing us the financial performance of the business. Now remember, a business's primary objective is to maximize profit for shareholders. So when we're looking at financial performance, what we're talking about is how much profit did the business produce and what were all the steps prior to creating that amount of profit? What led to the profits being generated by the business? So that is exactly what the income statement shows us. So the first thing that I want to do, or the second thing I should say here, is go through each line on the income statement, each of the major lines, and explain each step as we get closer to the bottom. And if you jump down to the bottom, you'll see that right at the bottom, we're seeing net income, which is profit. So we're working our way down to get to the end, to get to the bottom line, which is how much profit the business produced, which again, as I said, is the primary objective of a business, to maximize those profits. So the first line that you will see at the top of every income statement is a figure called revenue. Now, sometimes it's listed as net revenue or net operating revenues in this case. And it's also most commonly known as sales. So sometimes this top line will be net sales or just sales. All of those figures mean relatively the same thing. There are little differences depending on what type of business it is, but for the most part, they all mean the same thing. And what that means as a broad term is the total value or the total price of all of the products and services sold by that business during the period. So for the Coca-Cola company, what that means is the total price of the cans, the bottles, the syrups, all of the Coca-Cola that this company sold during the year ended December 31st, 2019. So the total price of everything they sold. Now, an important thing to understand is that revenue is only recognized on the income statement, usually when the product or service has been delivered to the customer or to the client. Okay, so when I say recognized, I mean when it will appear on the income statement. So basically the difference between will the revenue appear in the 2019 statement or the 2020 statement? When is it going to be recognized? And it's usually when the product or service is delivered, okay? Not when the money is received by the company. And that's important to understand. It's a distinct difference between the cash flow statement, which shows us the cash in and outflows, and the income statement, which shows us when the revenue is earned. Now, for some companies, this doesn't really matter too much. There's not a huge delay between the two. But for other businesses, there is a big delay. If you think of something like a cruise line company, people pay for the cruise up front, and then maybe 6 months later, they go on the cruise. And in that case, the revenue will only be recognized. It will only appear on the income statement after the person has been on the cruise, after the service has been delivered to the customer, not when they paid for it. So that's important to understand. And the same goes for the expenses that we're about to go through on the income statement. So the next line you will see is cost of goods sold. And these are costs that are directly related to the sale of their physical products. So these are things such as the steel and aluminium, or just aluminium, I think, and plastic, the physical materials that go into creating a Coca-Cola can or a bottle. Of course, the water that goes into, and the sugars and the syrups or whatever flavoring that they put into their Coca-Cola drinks. All of those are related to the physical product, and those are called cost of goods sold. Now, if you have a business that is a pure service business, so they just provide a service, they don't have a cost of goods sold because there's no physical products. But the reality is that most businesses have a combination of service businesses and some kind of product that's involved, something that's physical that they need to provide to the customer. And essentially what you will see is after the cost of goods sold, we get our first profit calculation, which is gross profit. And gross profit is simply revenues minus the cost of the goods sold. Okay, and that gives us our gross profit for Coca-Cola Company. That is $22.6 billion. All right. And then we get into our operating expenses. Now, these are expenses that are related to the normal operations of the business. Okay. And these are usually broken up into a couple of categories. We have selling, general administrative expenses. So selling, you could imagine, includes marketing costs, advertising. Administrative might be more related to management costs. General might be related to office expenses. So these are all things that are a part of the normal operations of the business. And once we've gone through those, we then get to the operating income. So this is another profit figure. I really don't know why they didn't call this one gross income and then operating income to be consistent, but operating income, operating profit, it's the same thing. And this again is basically just the revenues minus the cost of goods sold minus all of the operating expenses. And then we get the operating income figure. Now, before I go on, remember how I was talking about revenue being recognized on the income statement when it is earned, when the revenue's earned, not necessarily when the money is received? Well, the same thing is true for expenses. So expenses don't appear on the income statement when money is spent on them. They appear when that item or that resource has been used up, when it's been consumed. So I'll give you an example of this. Let's say that the Coca-Cola Company spends $100 million up front at the start of the year in January to buy a lot of stock, to build up their inventory of Coca-Cola. All right. So that would be a cash outflow, right? When they pay to get all of that stock. But that won't appear on the income statement as an expense, that 100 million. What will appear on the income statement is any cans of Coke or any of that inventory that they sell, anything that's been used up, okay? So that, again, is another distinct difference between the cash flow statement and the income statement. On the cash flow statement, it will show that they spent $100 million to build up their inventory. That's $100 million on inventory. Whereas on the income statement, it will only show what they sold. that $100 million will slowly become an expense as that inventory has been sold. The same is true for something like staffing costs, for example. A business might choose to pay their staff upfront for the year's worth of work. Again, the outflow of cash will appear on the cash flow statement, but on the income statement, the expense for those wages, for those salaries, will be evenly spread over the course of the year as that resource, that individual's work, as that resource is consumed over time. So that's how expenses appear on the income statement. Now, after operating income, you then get into the income and the expenses that are not related to the normal operations of the business. So interest income, they probably have some assets, some investments that they've made, and they're earning interest on those investments, okay? Then they have interest expenses, so they probably have some debt that they have to pay interest on. And again, that is an expense that is related to those debts. We then have equity income or loss. Now, this is a new one. So for the stock market investments that the Coca-Cola company has, any changes in those prices throughout the year will now appear on the income statement. So again, this is not related to the normal operations of the business. This is just the Coca-Cola company that has a bunch of stock investments. They've stored their money away in some investments. So again, that's another line that contributes to their net income. We're getting closer to it. And then, of course, we have income taxes, so they have to pay tax, although some companies seem to figure out a way to not pay income tax, which is interesting. But ultimately, we get down to what is called the bottom line, which is the net income. And the Coca-Cola company has some strange investments that I won't go through in today's video. It's a little bit too complex, but ultimately, the bottom line for the Coca-Cola company is net income attributable to the share owners of the Coca-Cola company. And for most businesses, this will be listed as just net income. If we have a look at Facebook, for example, we have their net income figure here. And you can see, again, they have a similar line, net income attributable to their stockholders. It just happens to be the same as their net income figure. But that net income figure is how much profit the business produced during that period, right? Okay, this is the figure that we're trying to work towards. It's showing us the financial performance of the business during a certain period. Then below that, we have two figures, which are called basic net income per share and diluted net income per share. Now, these figures are most commonly known as basic EPS, earnings per share, and diluted earnings per share. So earnings, again, same thing as net income, same thing as profit. And these are basically the net income figure broken down on a per share basis, because when you're investing in a company, you're buying them on a share basis, right? You're buying 1 share or 10 shares. So it's important to know what the profit that is attributable to each of those shares. Now, the difference, there is one major difference between basic and diluted. You'll notice that most of the time the figures are the same or very, very close. The way to understand this is basic includes all of the currently existing shares. So all of the shares that are actually in existence right now for the Coca-Cola company, whereas diluted includes all of those shares plus all potential shares. So one way that a management team gets compensated, so that say the CEO of Coca-Cola, one way that they get compensated is they can earn shares, right? And they have a plan that if they hit certain milestones, they will earn shares. And those shares don't currently exist, but they will be created if the CEO hits those milestones. So for that reason, diluted is a more safe, more conservative way to look at profit per share, because it includes all of the shares that may become, all of the shares that are potential shares, that they don't exist right now, but they might exist in the next few months or the next couple of years. Now, as promised, I am going to show you what are the things I look for in an income statement when I'm making a stock market investment, when I'm analyzing a business to make sure that it is a great long-term investment. But before I do, I just want to jump over quickly to Facebook's income statement and show you that it is a little bit different. There are some different lines, but the core of what this is showing us is the same. At the top, as I said, we always have revenue, right? Then we have what they call total costs and expenses, but this is their operating expenses. We've got cost of revenue in there. We've got research and development, marketing, sales, general and administrative, in the same way that the Coca-Cola company does. They just break it up into, well, they have it over 2 lines, whereas Facebook has it over a couple of lines. Again, we have all of the other income and expenses that are not normal operating expenses. And then we get to the net income. And then eventually we get to the net income or earnings per share, net income on a per share basis. So the core of it is the same. It's just that there might be some financial terms in here that differ. And as I said at the start of the video, you can put any of these into Investopedia, and you'll be able to quickly find an explanation. Or if there's any specific ones that you're having trouble with, head down to the comment section below and let me know, and I'll be able to help you out as this video goes live. But with that said, in terms of my analysis, there's really 3 major things that I'm focused on when looking at an income statement. The first is that, well, okay, first of all, there's 2 numbers that I'm looking for. The first is the revenue. So I'm looking at revenue over time and how that's changing. And then I'm also looking at earnings per share over time. So net income per share, profit per share, earnings per share, whichever one you want to call it. And what's important to understand is I'm not looking at these over a 3-year period, for example. I'm always looking at this over a 10-year period. Okay, so you can use a website like QuickFS to get 10 years of financial data. And sometimes I'm even looking over a longer period, because really a 2-year snapshot or a 3-year snapshot for how a business has performed tells you absolutely nothing, because businesses go through short bursts of being really successful and short bursts of being not very successful. Whereas over a 10-year period, we can really see which businesses are thriving, which ones are consistently doing well. So then what I do is I take the 10-year numbers for revenue and for earnings per share diluted, and I put them into my spreadsheet. And you can download this spreadsheet for free. It's down in the description below. And in the growth tab, we will be able to see the growth of these figures over time. So we have the 9-year average growth. So what's the compounded growth rate over the past 10 years, over the past 7 years, 5 years, 3 years, and then in the last year. And I'm looking for all of these numbers to be above 10%, so consistently strong growth, and improving over time, or at least consistent. So we can see in the graph here for Facebook, growth is slowing down because it's coming down from being very, very fast. But you can see that it's very, very consistent for the most part, except for earnings per share, which had a bit of an outlier in 2019. If a business is consistently growing their sales at a high rate at 10% or more, and this figure is consistent or improving over time, and we see the same thing from their earnings per share, it's a good indication, or it's the start of a strong indication that this business has a distinct competitive advantage. So the business has something unique that will allow it to thrive over the long term. And as you can see, the other 2 numbers that we look at to confirm a competitive advantage is equity on the balance sheet and cash flow for owners, which I will not be discussing today, but I have videos on my channel covering them. So go check out those videos if you're interested. The other thing that I'm looking for in terms of the income statement is the profit margin and how that's changing over time. So that is really showing us the relationship between this revenue figure and this net income figure. What percentage of their revenue is trickling all the way down to net profit or net income? And again, you can use QuickFS to see this really quickly, and we can have a look at the operating margin. And we can see that for Facebook, this has declined over time, which is generally something we don't want to see. Generally, we're looking for a business that has an increasing operating margin over time, meaning they're getting more efficient over time. Or at the very least, that it's stable over time, that it's staying very, very similar to what it was in the past. Just before we finish this video up, I thought that I would quickly show you an example of a business that is struggling and how we can identify that in the income statement. So we've got Maya Holdings Limited here, which is an Australian company that's been struggling for quite some time now. And if we look at their top line, we can see that revenue in 2010 was $2.9 billion, and that has just progressively decreased. Well, it stayed flat for a while, and then it continued to decrease over time. So they're bringing in less and less money over time, which is clearly a negative thing. And then what we can do is we can take a look at net income, and we can see that net income is just all over the place, right? One year they made 67 million. The next year they made 160 million, then 139, then 127, 98, 30, 61, 12. They lost half a billion dollars. Then they made $24 million. So they've really been all over the place. And obviously the same is true on a per share basis. That's just the signs of a business that doesn't have a distinct advantage, because if they had a distinct advantage, customers would be consistently coming back in higher numbers every single year, and they would be consistently growing their revenues and their profits, their earnings on a per share basis. So, I hope you guys enjoyed today's video and got some value out of it. And as I said at the start of the video, if you did get some value out of this and you want to show me some support, the best thing that you can do is hit the like button and let me know your thoughts down in the comment section below, or just ask me a question or leave me any kind of comment there. And as always, if you want to see more content like this and stay up to date, then the best thing you can do is be subscribed. Hit that notification bell, the little bell icon next to the subscription button, so that you get updated when I am posting. But other than that, I hope you guys have a great day, and I will see you in the next video.